Hi, it's me again, your favorite professor. I'm going on to part two of the depreciation example. I just finished up talking about the accumulated depreciation under the two methods, left-hand column, financial accounting or GAAP, or book accounting, some people refer to it as, and the right-hand column, tax depreciation. Our accumulated depreciation was $2,000 for book purposes, so if you were asked what is the book value of that asset at the end of 2 years, it would be the $11,000 cost less the $2,000 of accumulated depreciation to that point, giving a book value of $9,000. For tax purposes, it would be the $11,000 cost less the accumulated depreciation from the first 2 years of $4,265, giving what I would refer to as adjusted basis for tax purposes, similar to book value, but the term would be adjusted basis of $67.35. And again, there's a difference because of the difference in depreciation expense that we took the first 2 years. We would have to have these numbers ultimately if the asset or when the asset is disposed or sold of to know if we have a gain or loss on the disposal of that asset, and potentially depreciation recapture if we dispose of the asset for tax purposes. Let's look at a year one essentially income statement under the two methods. If we had revenue of $20,000 for each method, cost of goods sold of $12,000, giving us a gross profit of $8,000. Revenue less cost of goods sold, gross profit $8,000. Assume selling general administrative expenses of $3,000. And if we pull the depreciation out as a separate line, and all we depreciated was this furniture, under year one for book purposes we have $1,000. Under year one for tax purposes we have $1,571 of depreciation expense. Thus this book to tax difference is going to give us a different amount in our net income or taxable income at the end. I also put another separate line in here to show you another book to tax difference. This one is meals and entertainment. For book or financial accounting purposes, we would expense 100% of that cost. For tax purposes, the tax law only allows us to deduct 50% of that cost. And so here we have another book to tax difference. If we take our gross profit, subtract off these expenses, we would have net income for book or financial accounting purposes of $3,600. We would have taxable income for tax purposes of $3,229. This is the dollar amount that we would be using in determining our tax liability. This would be the dollar amount that we would have on our income statement for financial accounting purposes. If you have questions, please send me an email and I'll try to explain it a little further for you. Hopefully this was helpful to you.